Good morning, everybody. Hope you had a great evening. It did cool down here yesterday. We were back in 40s. Today we're supposed to be in the 40s with rain in the forecast from tomorrow. Our best moisture comes when that big low comes on shore in Los Angeles and begins its journey eastward, and that's what we're looking for. So they've got a lot of rain in the forecast for the entire state of Kansas, and we desperately need it. Pretty dry. This warm, dry weather that's been in place for most of January has brought very, very little moisture with it. So the wheat crop needs it. Okay, yesterday the market really held its own. 5- and 7-year auction were there. This $4 trillion balance sheet of the Fed and the soon-to-be grown balance sheet of the ECB will grow at least $1 trillion over the next I think 16 months, is removing collateral from the system. In the repo business, if you're a little short of cash to meet your capital requirements, etc., you can go into the repo market and get cash from other banks, major banks in the system, if you put up the appropriate collateral, and that's usually treasuries in the United States, and in the EU, I'm sure it would German paper over there. So this makes the repo market a little expensive. It makes the banking operations of the large money center banks tighter. They can't move as fast or be as flexible as they have been historically. So that's another reason for interest rates to kind of hold in. Okay, we're at the top of the trading range right now. Our first sell is 19 to 23. That's where resistance is, then 27 to 31. For sell 2, fourth quarter GDP is friendly at a 3.2. It is less than the third quarter at 5%, but that's a pretty strong number. The deflator at plus 1%. So the Fed is not worried about inflation. Employment cost index. This one could be lower than forecast at 0.5%. It's kind of the default number, but if you look at the job situation around the United States, that does not ring true. Chicago PMI, 57.7. That shows healthy automobile manufacturing. And Michigan sentiment, this one could come in higher than forecast at 98.2 because of the strength of the stock market. It's a 2-week measurement, so the stock market has generally been a little bit lower. So this one is a stock market. So our number 1 focus will be GDP, the E-minis reaction to it. Number 2 will be the Chicago PMI, and number 3 will be Michigan sentiment. On the buy side, I see pretty good support down here at 12 to 8, so we'll put our first buy at 13 to 9. Obviously, I'd like to get done closer to the value area low. We got volume from yesterday at 6. We've got volume from a couple of days before that, 3. So our 5 to 1 will be buy 2, leaning against volume, and we'll see how she plays. Okay, for the 30-year, the knob spread strengthened overnight. We've seen that the last 2 nights, and it weakens during the day as people take profits. So we'll watch that this morning and see which way it's going. Right now, everything is pointed up on the year, more so on the year. And you can see right now in the overnight session, we've got pretty good support down here at 150, and resistance starts at 151.08. So we're at 150.30. So this is where resistance is, so we'll make 3 to 7, sell 1. Obviously 7 would be better than 11 to 15 where we had it yesterday. Sell 2. On the buy side, we've got volume at 21, we're at 30. The London lows at 13, so we'll make 17 to 21. Actually, let's make it 13 to 17. Like that a little better than 5 to 9. And again, the E-minis reaction to the news, the GDP number probably tells today's tape. Okay, this is settlement day. We had the 2, 5, and 7-year. There was a floating rate note and another one. I think a TIPS note got off this week. So a lot of money comes into DC today from the primary dealers. This tends to sideline the players. Anybody that wanted the cash instrument has it. The dealers have manipulated prices all week to move as much paper as they can. And so you sideline the dealers and you sideline those that wanted cash treasuries, and it can lead to a quiet market. Okay, gold. We had the 60 area is potential support. 55, 57 was the second one. So we didn't break it. Looking at, you got this chart up here at 78, 77, 73. The move started yesterday from 70. We are at resistance, so 65, 67 is the resistance. And then we'll make it lean against 75, and these other numbers over here, we'll make 73, 75 for sell 2. The E-mini rallies, it can pressure gold. The E-mini sells, risk-off type investments can bring in buying. We'll make 55. We'll give it a little room this morning. May have to pay 60s. 55, 57 for buy 1, and then 50 to 52, basically where we were late yesterday. It's hard to believe it's already the end of the first month of the year, isn't it? You know, when you're having fun and doing what you like to do, time can fly. I mean, every day at the end of the day, you know, it's just, wow, where did the day get off to? And, you know, you have to feel sorry for people that are really stuck in jobs that they can't stand. It really has to take its toll over time. And I remember in my military experience was during wartime, but the war started to wind down from 72 on. And I can remember they called RIFs, reductions in force, how they were just going through, and anybody and everybody in the Army who, you know, wasn't a poster boy soldier was getting their walking papers. And I mean, it's pretty sad. People made the careers, but I can still remember even in that period that so many people would hide books and other materials inside of manuals, and they'd sit at their desk with a big manual open in front of them, stood on edge, not on its back, and trying to amuse themselves for 8 hours a day. And I'm saying, God almighty, you want to spend the next 20 to 40 years doing that, no matter what your retirement looks like? But there's a portion of the population can do that. I mean, I've never been able to do it. And looking at the, so I guess I'm not wired that way. The euro, that 50 to 60 area, then 75, so basically the buck. So we're still looking at a seller in the 114 area and a buyer in the 1250 area, and that's kind of where we are. So we're at 10. Last rotate up stopped at 41. So 40 to 50, sell 1. 70 to 80, sell 2. On the buy side, let's just make it 75, 85 for buy 1. The GDP number should bring in some selling, and then our 51, 1250 for buy 2. Our economy at 3.2 would certainly be stronger than the European Union's. Okay, Denmark cut interest rates again yesterday. Russia overnight surprised people and cut interest rates. Fear of a recession, and don't go well, duh. Be unusual if Russia did not have a recession based on what's going on with oil prices. Now, one of the things, you know, everybody thinks everybody is just exactly like they are. They'll react the same way that you react. I mean, there's no way you can not think that. And so sanctions, and you know, it's kind of like timeout in the Western world, is supposed to have a broad impact on Russia, but what it does, it gets their back up. You know, you can point to the West is doing this to us, or whoever their enemy is, and it's a tried and true, age-old way of averting attention from the problems you created to the problems, perceived problems that other people have created or are being blamed for. So the thinking we're going to sanction Russia into keeping their hands off Moldavia, the Ukraine, Belarus, wherever else they want to go, that's not going to work. Never has really worked. And so this idea that we put you in timeout, we're going to punish you, the Russian people are used to lousy standards of living, and they're used to having hardship I'm not saying they pride themselves in it, but they know how to handle it. Whereas in the United States, anytime somebody even hints at cutting anything back, people start whining and crying, and you can't do that. I know the only way I've ever grown in my life is when I've been forced to. I'm not saying that I'm hardwired for fat, dumb, and happy, but I think most of us are. Body at rest, and stay at rest. Okay, Janet Yellen, on purpose, leaked through Chuck Schumer that interest rates were going to stay low for a very long time. That would be a little bit contrary to their official announcement the day before. So the Fed is trying to manipulate and support the market rhetorically. And anytime they think the selling might get out of hand, they come back in and do that. So we got pretty good support here at basically 2,000. The market sold into this morning's GDP number on the fears that it might be a little low in forecast. My guess is that it will probably rally back and hold this 2,000 area, but we will finish the month off a little bit. On the sell side, we've got a London high at 13. Last rotep stopped at 9. We're currently at 3, so 9 to 11, sell 1. And then 14 to 16, sell 2. The most potential, because we've sold overnight, is to the upside off the GDP news. GDP is expected up 3.2, or plus 1%, so inflation's not a problem. Hasn't been. They've been fighting deflation since 2008. They just don't say they are. Employment cost index, I think, could come in lower than forecast. Chicago PMI at 57.7 and Michigan sentiment at 98.2. Okay, it'll take at least 20 minutes to get everything up and posted. I'm going to get busy on that. We'll be back in 27 minutes and see what the news brings us.